I'm just gonna do a top down on the DXY. This is something I like to do at the beginning of every week just to see what we got going on. All right, so there's that monthly fair value gap. At the end of last month, we completely filled it in. All right, dropped back down to the bottom of the fair value gap and closed. Opened the new monthly candle. Looks like we rebalanced this weekly fair value gap here. All right, so this was our objective last week. I never got a chance to post last week's weekly watch list, but this is what we was anticipating to happen. We had successful trades on Euro USD and GBP USD off of this analysis right here. All right, so the idea last week was to get a push down into that weekly fair value gap, expansion to the upside to take out the next draw on liquidity, which is this high right here. So this would be previous month's high. But depending on what we do today and going into tonight will really give us a better idea of what to look for, right? Because I was looking at this push down as a higher time frame retest into this weekly fair value gap. I don't look at that as a reversal. I'm looking at that like a higher time frame pullback. And I want to see this bullish structure maintained. So going into today's price action and London session tonight, this would really be a point of interest for me to see if we can't push down in that area. This is a fair value gap coupled with a mitigation block, and it also be the top level of that weekly fair value gap. My thoughts on the OTE rejection. You're talking about from a bearish standpoint, right? Because that's something that crossed my mind as well, right? And you're absolutely right. This could reject price, but I believe that it will reject price temporarily and give us something that looks like what happened last week. Now keep in mind, this is the weekly fair value gap here. This red line is what we was anticipating to happen last week, right? We wanted to see price open up on Sunday, trade down into the fair value gap, and then continue its bullish trend because we are bullish, right? So what you are seeing is price reject from this expansion down, but I would not expect this to be a retest in order to come back down and take out this low, right? I wouldn't expect that. All right. So once again, yeah, nice to meet you too. All right, so once again, we want to see essentially the same thing that we seen last week on the DXY. We want to see price open on Sunday and give us that accumulation and manipulation, and then the expansion to the upside. That's what I am anticipating to see, right? All right, I had to move my microphone. So once again, let's go to the weekly because a couple people just hopped on, and I want to, once again, give them my higher time frame perspective on this. All right, so last week when we opened up right here, all right, I did a weekly watch list. I'm sorry that I didn't never post it on YouTube because I don't even know if I went live for the free members. But what we was talking about was wanting to see that push down into the fair value gap on the weekly time frame leading into Tuesday, Wednesday, and then get that expansion higher. All right, we got that. It played right into our hands, and we got some successful trades on EU and GU. Now, going into this week, I want to go back in time, right? And let's go look at a couple of examples of what price looks like as it is retesting down into a fair value gap. All right, so I'm just gonna highlight a couple of examples that's that occurred over the last, few months. All right, that's enough right there, really. That's 3 examples. So think about it. Look at what we're seeing right here, opposed to what we've seen on these 3 examples. It's real rare that you will see an institutional order flow entry drill, which is this pattern here. That means we get that 3 candle formation that forms the imbalance, the fair value gap, and that 4th candle opens up, fills in the fair value gap, and then takes off. Typically on the higher time frame, it will spend a couple weeks, sometimes longer, inside of that weekly fair value gap. For example, like it did here. See, this candle did not just simply hit the fair value gap and take off. It hit the fair value gap, went into a period of accumulation, manipulation, and distribution. So, all right, here, for example, we created the fair value gap and didn't come back down into it until 2 weeks, 3 weeks later. So your bias would have been switched to bearish for a couple weeks. And then you have to have the knowledge and experience to understand that this is not a reversal. It's just simply a higher time frame pullback. And then we just continue this bullish trend. Here's another example, right? And you always need to understand what side of the market you are on. Are you in a premium or are you in a discount? And you do that by anchoring your fibs on the most recent swing low to the most recent swing high. In this case, this is what price looked like. So as we make that high and start to move sideways, you have to understand that although we are bullish, it literally took a couple months for price to get back down into that discounted area, into this fair value gap, before we were able to continue our trend. So with all that in mind, let's jump back to over here to current price action. We're going to get our most recent swing low to our most recent swing high. And look at where we at now compared to where we were last week. Price traded down, right? Optimal trade entry, fair value gap. Here's your equilibrium. I mean, this was beautiful. And I'm in a swing trade right now on Euro USD and GBP USD that went for several hundred pips last week, all based on the DXY's analysis, right? So if we are anticipating a bullish week, what do we want to see? We would probably have to drop down to a daily, and we have our most recent swing low. And I don't really feel too confident about this being a swing high at this moment, but we have to work with what we have. Right here on the daily, this is what I see. See this daily fair value gap. All right, I sent a trade idea out to the free members of Euro USD, and I'll show you what that looks like. It's just a mirror image of what we're seeing on the DXY, right? That's the most logical thing that I can see that is going to happen if we are going to continue going up for DXY. Now, they might throw us a curveball, and like my dude said earlier, he asked me what my thoughts were on the OTE rejection for the DXY. And what he is referring to, I believe, is this swing high down to this swing low. Price push right back up into, right back into that 62, 70% retracement level. Bearish order block here. right? Why would this be our bearish order block and not this one? Because everybody seems to think it's the last up candle before the down move. No. This is because the other one is short, not fat. Exactly. But I honestly do not think that this is enough to stop the DXY from getting up in here. All right. I'm just going to take a look at the Forex factory real quick. So we got medium impact news, 12 p.m. tomorrow. FOMC member Mester speaks. We have to always keep an eye on Forex factory. These are our volatility injections, and we expect for price to begin the weekly expansion on Wednesday, at least by Wednesday, okay? And that aligns with what we're seeing on the Forex factory, because we literally have red folder news for the Great Britain pound right before London open. So this is probably where I would expect to see the high or low of the week form, either during London session going into Wednesday, or Wednesday New York open sometime, and that weekly expansion starts. We got red folder news at 8:30 a.m. on Wednesday. So imagine this. We have volatility injections, red folder, high impact news drivers at 8:30 a.m. on Wednesday. Do you think it's possible for price to get down into this level by Wednesday? I do. I think it's possible. Like my boy said, we're coming into this bearish order block. That is enough to reject price in order to rebalance this fair value gap, dig into this bullish order block, possibly. I mean, the fair value gap lines up perfectly with the top of that order block. That is a small fair value gap. So I would not really expect for price to respect that fair value gap completely. I'm going to keep this weekly fair value gap annotated on my charts, because it's still very much a factor at this point. Now, we filled it in completely and traded out of it, but so many times we see price trade down into the fair value gap, bounce out of it, come back down, and find support at the top of the fair value gap. So that's essentially what I want to see. Now, if they throw us a curveball, right, we're going to have to improvise. And this indeed is the beginning of a reversal going into the fourth quarter, going into next year, because we do typically see trend reversals going into a new year. And you can go back and look and see what I'm talking about. Towards the fourth quarter, we'll start going into an accumulation. And by the time January, February hits, we will be well on our way into a trend reversal. Look what happened right here. This is the end of 2020. December, here's January, right here. It's not a coincidence that December 28th to January 4th, we made this significant low. And by the time March, April, going into May, look, we literally reversed. So this is seasonal tendencies, and these are things that you anticipate to occur, so you don't get caught on the wrong side of the marketplace. And for anybody who don't understand why I pay so much attention to DXY, bear with me, because this is a very powerful currency, and it directly impacts the majority of Forex pairs. Euro USD. So we have our target down here. This is the next draw on liquidity, in my opinion. Drop down to a weekly, because that gives us more to work with. There's that fair value gap that we was anticipating to get hit last week. Here is a bearish order block. It looks like it hit the mean threshold of that, like, perfectly. First, I want to show y'all the same thing I showed you on the DXY. Couple of examples, right? We participated in this, okay? We also participated in this. These are moves that I got on live and literally built up anticipation for. And that's super important. That's super important. I remember this like it was yesterday. This volume imbalance right there, you treat it just like a fair value gap. There's no bodies inside of this area, which is a very significant thing because we literally have 144 pip range where there's no bodies of a candle. So that was significant to me. And this was our POI at this point. So it's just very, very, very simple, y'all. You just have to learn how to incorporate the lower time frames. You might have to end up sitting on your hands for a while. Even as an intraday trader, you can take advantage of both sides of the marketplace if you understand what the higher time frame is doing. So now that we have these weekly fair value gaps highlighted, I'm about to drop down into a daily time frame, and we're going to look at the markets keeping that weekly perspective in the back of our minds. So we'll start from over here in this weekly volume imbalance. The first thing that I noticed is that right before price pushes up into our POI, we were held in a consolidation. And this is, the power of three concept: accumulation, manipulation, distribution. I'm not going to get on a lower time frame and go all the way back to March, but I'll be willing to bet that one of these significant highs here were formed on a Tuesday or a Wednesday, okay? And see, these are things that we anticipate to occur. This is how you incorporate the lower time frame to get your entry with the higher time frame POI. You anticipate for price to dig up into your POI a specific day of the week in a specific time of the day. This is time and price. And you also have to understand where you're at, a premium or discount. So as price is trading down, you can tell when a significant low has formed. Look at the change in the state of delivery of the candles, right? This is just another accumulation, manipulation, distribution for a retest. Once this swing low occurred, you have your weekly fair value gap, and it took a whole month, 28 days, for price to retest, hit the weekly fair value gap, went into a period of consolidation before it got up out of there. This would have been a time where traders would probably struggle. Even with these concepts, traders would probably struggle. That's what I'm saying, man. You always have to keep it in your head that price is digging into a weekly fair value gap. So it can do one or two things at this point, y'all. It's either going to hit that fair value gap and take off, or it's going to hit that fair value gap and consolidate, accumulate to generate liquidity in order to take them out, right? So even though, just say you were not able to get a bead on this shit, like because price went sideways for 16 days before we expanded out of that fair value gap. 16 days, bro. How could you have got a trade in during them 2 weeks? You probably could have got lucky and caught a little scalp here and there, but overall, it would have been tough. This is the beauty of it, man. Just say you would have took a few L's inside of that consolidation. If you're looking at it from this higher time frame perspective, there's your displacement out of the fair value gap. Price jammed down quickly out of that fair value gap, and look what it did. It gave us another one on the daily time frame. So let's get some framework. Our most recent swing high to our most recent swing low, and the equilibrium of this price swing is at the consequent encroachment of that daily fair value gap. And when things like that happen, it's not a coincidence. I would have been all over that. You hear me? Now, just say price would have did this and jammed up into that fair value gap. Depending on the day of the week and the time of the day, I would have went short. But if I'm not swing trading, then I understand that I need to be getting out of my trade. Like I close partials and I get out of my trade depending on what time it is. If it's New York open and I'm opening a position and I understand that there's a high possibility that price could go sideways because it's in a higher time frame fair value gap, I'm going to close that trade by letting it close. Sometimes even before then. If I get a nice expansion, 30, 40 pips, I'm good. You know, a standard lot, 30, 40 pips, 2, 3 standard lots, 30, 40 pips. You in there, bro. You can't beat that. Don't get greedy, right? But anyway, like I said, man, price displacement to the downside after it hit that weekly fair value gap. That's it. That's it right there. From a swing trader's perspective, that's insane. That's 600 pips. Although ain't nobody gonna close right here, you know? But just think, man, like that's insane. It's not very difficult to understand. I'm just a messenger, you know? ICT, all credit go to him. I'm just trying to help people, you know, I'm trying to summarize it for him. I know I'm nowhere near the educator that Michael is, but I've done put in years of hard work studying my ass off. And I wouldn't be here today showing y'all these things if I didn't feel like I was at that level. Now pay attention to what's going on right here. I'm just going over back testing, bro, because you have to get used to these patterns. That way y'all can see what's going on in current price action, right? So we create the weekly fair value gap during this expansion down. We are still keeping this bearish bias 100%. Why change it, right? This is something that I tell people in my private group, you know, because they have issues with patience, and a lot of people do. A lot of people have issues with patience, and they want to buy or sell retest. And if you're buying or selling a weekly or daily retest, that's one thing. Ain't nothing wrong with that. You in sync with the marketplace and you understand that Euro USD is currently in a discounted area, and you know that it's going to retest this weekly expansion or what this expansion down, that's 100% fine, man. Go get you some pips, bro. Like buy this area, fair value gap. Boom. Ride it up into the weekly fair value gap. That's fine. But don't get down on these lower time frames and think that it's okay to see a 15-minute or 1 hour expansion down and try to, all right, a 15-minute expansion down and try to buy the retest from that expansion. That does not make sense. I see people do it all the time. It does not make sense. When all you got to do is wait for an hour, 30 minutes or an hour and let price retest. Fair value gap maybe, order block maybe, right? Boom, ride it down, catch that next expansion. Why you want 15, 20 pips here when you can get 100 here? That's all I'm saying. But anyway, I didn't mean to jump off subject. Here's that weekly fair value gap from this expansion. Our framework is our current dealing range. This whole area is our current dealing range. You don't want to be paying attention to anything outside of your current dealing range. When we drop down to a 4 hour or a 1 hour, we're going to have a different dealing range, right? But you always need to keep this, the higher time frame is king. Keep this dealing range in mind when you are on the lower time frames. So we trade up and hit the fair value gap, and look what happens. Accumulation. We're generating liquidity, right? On the lower time frames, retail traders are in their glory during higher time frame consolidations. Let me speak that statement again. When you get higher time frame consolidations such as this, retail Ricky is in his prime. Why? Because this is what they're doing. Support and resistance is getting respected. 100% of the time during this consolidation. They have their roof, which is resistance, and they have their floor, which is support. What they don't understand is that S for support looks like this on our chart. It's generating liquidity. Retail traders are literally buying it every time it gets down here. They're buying it. They're putting their stop loss wherever. And you got a lot of retail traders that swing trade, bro. And they think that they're looking at these time frames, different time frames, and it's just insane, man. And I remember studying these things, learning these things. This is generating sell side liquidity. On the other side of the marketplace, this is what's going on, bro. Us as ICT students, we have to realize what's going on here. Price hit that weekly fair value gap, and you understand one or two things are going to happen once it gets into it. It's going to take off and distribute, or it's going to go into an accumulation. And if it goes into accumulation, you have to identify that. You have to understand that. And we all struggle with it because you don't understand that you are in a consolidation until Wednesday or Thursday of that week. You know, like you don't really get it. I'm telling you, me as an experienced trader still cannot identify accumulation until after like Wednesday evening, because I always give the market time to go through that accumulation manipulation phase, Sunday, Monday, Tuesday. That's why I be chilling. I watch the market sometimes periodically during those 3 days, but I'm not actively trading unless I see a beautiful counter trend, you know, but that's beside the fact. We have our accumulation. Once this occurs, we automatically know what's going on. Accumulation, what comes next? Manipulation. And it's not just trading up into some random area, right? It completely filled in that weekly fair value gap. All right. You have this daily fair value gap that is inside of that weekly fair value gap. And that's significant. These are two different points of interest on the weekly and daily that are working hand in hand from our current dealing range. Once that occurs, and like I said, it probably happened on Tuesday or Wednesday. So they run out buy side liquidity. They come down here. They hit that support level one more time. And this is just beautiful price action. They run out buy side, right? They come down here, hit that support level one more time to draw in more retail traders. We're not looking to buy down here. We do not subscribe to the assumption that this is support. They drive it down, hit that support level one more time, push it up into that fair value gap, and eat their ass for lunch, son. Look at that. Boom. This is a trade that I would have been all over, and I probably did take it. Pretty sure I did. There's your target. That's sell side liquidity. And this is exactly what the trading rules look like. You have rule number 1, identify clear purge of liquidity. You have that there. Rule number 2, after the purge of liquidity, clear shift in market structure. So when this occurred, we would have got that shift in market structure on the hourly chart, 15. But we're going to be finding our legit POI from the daily. Look how beautiful that is. Clear purge of liquidity, shift in market structure. You get that displacement, identify your fair value gap, and it hits it. And what are we going to target? Our most recent swing low. Sell side liquidity resting below this swing low. It hits it and then goes into a period of consolidation. That's beautiful, bro. You can't get no better than that. And what you're seeing right here is kind of like what I want to see happen right here. Just look at the comparison. We traded up into the weekly fair value gap right here. We traded up into the weekly fair value gap right here. Okay, we expanded, creating a fair value gap. We expanded, creating a fair value gap. I'm not saying that we're going to get this. I don't know if we're going to get this, bro. Being that we started this expansion down, it could just hit the target. Like we just have to wait. It's all about waiting. I really think that was a good session. I don't even have to go over this. I mean, we just went over two different ones. I mean, this is the weekly fair value gap here. Price expanded. We have our framework. Price expanded, and there's nothing magical about this Fibonacci tool. It's very accurate, and like it happens a lot of the times. If you can identify your current dealing range correctly, then you could kill this kill zone level. Literally kill the kill zone. Feel me? But that's neither here nor there. All right. Weekly fair value gap. After price run out the sell side liquidity here, we went into a period of accumulation. And that's what this is, right? It's accumulation. And this push up was to clear out buy side liquidity that was resting above this accumulation and to rebalance that fair value gap. We hit that fair value gap and we participated in this trade. I called it out before the market even opened, right? And this is what happened. I called it out way before, and that happened. Go to my YouTube, you'll see it. So honestly, I really want to see a pullback up in here. Your thoughts on the scalp? Hold on. Damn, but you got an interesting chart. Is that what current price action looks like right now? I'm gonna be honest with you, bro. Like, you asking my opinion, I would not be trading on Monday. You know, that's just me. All right, so let's dissect the lower time frames. We have our target, our next draw on sell side right here. This is that daily fair value gap. You got relative equal highs right there. There's buy side liquidity resting there. I'm gonna tell you why you got to go look at historical data and look at what happens on Mondays, bro, compared to the weekly expansion. There's Monday's price action. How can you participate in that? There's no structure there. Now, if you would have been anticipating what we were anticipating, then you very well could have participated in a buy position when price did that at New York Open to go long into this fair value gap. That would have been an option, but you have to be in sync with market structure and you have to understand what price is doing. I have plenty of examples where for like this same example, I have went long and rolled price up to the high of the week and took profit and then found a sell and swung it back down. I'm known for doing that. I love doing that. But I try not to do it and put it out because I want people who follow me to understand patience and to wait on that significant high to form Tuesday, Wednesday, right? That's my goal here. I want to lead by example. So if I jump on here every week and buy here and then switch my bias and start selling, it's going to give people the impression that they need to be trading on Monday and Tuesday, when in reality, historical data shows us that the first 2-3 days of the week are dangerous because we are in the beginning phases of the power of three. This is what the bar chart looks like. The power of three. This is an up close week. Accumulation, manipulation, distribution. And we participated in a buy on Wednesday of this week. And we rolled price up, right? And I sold price down, got stopped out at break even. So I sold price down, which I typically don't trade Asian session, but it was just in an area where I thought price was gonna drop to take out this low, right? So I closed partials inside of this fair value gap and went to sleep. And by the time I woke up, I had got stopped out at break even, right? And I did not change my bias. I was still anticipating for lower prices. And then this happened. So we all make mistakes, you know. It's fine. We're not gonna smash out every single trade. We're not gonna get that weekly bias correct every time. I made money on this buy and I made money on this sell. And I was very content with that for the whole week. Going into the following week, we nailed it, bro. We literally nailed it. Last week, we made money. We participated in a sale at New York Open here. Okay. We participated in a sale at New York Open here. And me personally, myself, participated in a sale right when NFP took off, right here. Okay. This was a target for me, and this was a target for me. And I recorded that live and posted it on YouTube. Those were my two targets, and that's where I took profit. I sold during NFP, this candle. It was great. So we stuck to our bias. We didn't touch the market at all until this happened. We didn't touch the market until this day right here. Now that's patience, bro. And this is what I'm trying to teach y'all to do, is leave it alone, bro. I know it's hard. Trading's fun. We all love it. We all love trading. But in our reality, dude, like, that's 3 days and 23 hours. So that's 4 days, Sunday, Monday, Tuesday, going into Wednesday, that I did not place a trade whatsoever. So let's measure from New York Open on Wednesday to the market open there. 4 days and 15 hours before we participated in the trade. Can y'all do that? Be honest with yourself. Be brutally honest with yourself. Can you do that? Once you get to that point, you're gonna start seeing consistency. You're gonna start being successful. And I'm documenting this journey right now of me growing a small account, because I understand that a lot of people do not have $5,000-$10,000 to throw into a live account, right? So, excuse me. And funded challenges are difficult. They're not difficult in the aspect of like trading and getting profit. They're difficult in the mental battle that you go through during the challenge. It's tough. That max daily drawdown, the whole thought process of getting 100K in capital, or 50 or 25K in capital, is exciting. And people think because they get on a demo account and bust out these trades and make hella money, that they could pass a challenge in no time. And let me tell you, I done failed plenty of them. I done failed plenty of them in my years of trading, bro. Thinking that I could, like, it's not that simple, man. And I'm not trying to discredit it. That's not what I'm doing here. Getting funded is a beautiful way to take off as a trader. But I don't recommend it to anybody that can't consistently trade a demo account for at least 6 months, 3 to 6 months, man. That should be mandatory for every trader. Demo it, paper trade it for 3 to 6 months. Highly recommend 6 months. And I'm not talking about 100K challenge. I mean 100K demo account or a 50K demo account. I'm talking about a 3K demo account. The least amount that you can open with a broker demo account. The least amount. That's why I'm doing this small live account right now. And I started with $58. Y'all already know I started with $58. And during this trading week, I put the money in there, I think Monday. And by the end of the week, I turned that $58 account into $237, I think. This happened, yes, last night, right when the market opened, because I was trying to teach somebody how to trade, how to navigate MetaTrader, somebody who is new to Forex, right? And I didn't realize that I was on this account, right? And I'm telling him, hey, open 3 different trades with 3 different lot sizes so you can see how, you know, the pip value is. And I opened these trades on that small account, bro. And as soon as I realized it, I closed it. So now that $240 account is back down to like 210 or 208. But that's just a minor setback, man. You know, it's all good. So for those of you who ain't in my lifetime group, I'll just show you real quick. I currently got like, I think 28 people in here. This is the section for the educational content, smart money techniques. This is just examples, right? Fair value gap. It's just a lot of good content in here, bro. All credit to ICT. Right here is the most important and should be at the top. Is the weekly range concept. This is it. This is the heartbeat of our approach to the marketplace, man. You know, I got a lot of examples of how to trade fair value gaps, the importance of time and price, pattern recognition, and I got videos. Some of these are on YouTube, but most of them are not. And right here is in the lifetime membership, you get a, you know, one-time payment of $100, lifetime signals, and lifetime educational content. I'm about to do another dump into the educational content here soon to update it and post newer videos and newer charts and stuff like that. All right, here's an example of a trade that we took on XRP, you know, for my people who trade crypto. This is the before screenshot. This is what I seen, 4-hour fair value gap. I told them right here, when we get down to that level, we're gonna be looking for buys. And this is what happened, right? That's when it hit that fair value gap. This is when we executed the trade. A nice little profit during the weekend. Beautiful, right? It hit that first target. It hit that first target. All right, there's the daily perspective, right? The daily fair value gap. That 4-hour fair value gap was a refined entry, a fair value gap inside of a fair value gap, right? That's what we do. I closed parcels right here. I was targeting this high up here. That's where I had my take profit right there. And it fell short and it retested. Here's a perfect example of a classic fuck up by me. I made money on this trade. All right, so this is what it looked like. I closed parcels during this push up. Then I moved my stop loss right here and went to sleep. I woke up a few hours ago and realized that happened. I'm sorry. I placed my stop loss right here. I apologize. I didn't place it at the top of the order block. Yeah, so I really didn't want to see price get down below this hourly order block and fair value gap. But in all actuality, looking back on it, I should have knew better, because this is our order block. This is the valid order block. It is not this one. looking back, you know, and looking at the 4 hour, I should have definitely knew not to put my stop loss right there. It makes 0 sense. If I would have put it at break even like I normally do, I would have been fine. And it looks like price is gonna stop right here where it's at and get up there to that next target. This will be our next target actually, and then this one. And when I trade XRP, it's one of my favorite cryptos to trade because look at how beautifully it respects our concepts. Fair value gap respected it beautifully. Here's another example. Respected it beautifully. Fair value gap with a bullish order block. Didn't hit the order block. Mitigation block right here, coupled with a fair value gap. Here's another example. There's a volume imbalance right there. Bullish order block. Fair value gap. It made about $1,500. It's unfortunate because this target is going to get hit, I believe. Price could dig back down into this fair value gap and fuck around. I don't know. Or I would definitely like to see it respect that order block there and then continue its trend. But anyway, that was just a weekend trade that we did. He said, you're right, I'm in the FTMO challenge. I'm K-Juice in the group, by the way. I like how you organize the educational stuff. I'm a new fan of Discord. That's what's up, bro. I'm glad to have you, man. Welcome to the group. What we're doing right now is just a weekly watch list. And y'all feel free to drop some pairs in the chat and I will go over them. I'll do a top-down analysis on them. I always kick off my weekly watch list like this, though. Like, I go over DXY and I go over Euro USD. They're my favorite. That's my main thing. And I love trading GJ, too. We made some money on GJ as well last week. I would be interested in seeing something like this happen on GJ. I do want to see it continue going down, okay? I like the way this pattern looks. We got relative equal lows, sell side liquidity. We got this huge push down and a rebalance. I really didn't like the way that happened. I was anticipating for it to respect the fair value gap or at least 50% of this order block. It really overshot it. But if you drop down to a daily, this bears order block right there. And right there, coupled with that order block, is a small fair value gap. And this is what I based my entry off of last week. So I would really, really like to see for price to dig down into this fair value gap. And eventually, over the next couple weeks or so, few weeks, get back down here to these relative equal lows and that last swing low right there. And if you look at the monthly chart, look at where we're at, right? We hit that 62% retracement level and we got beautiful equal lows right there. Man, y'all, patience is the key to this shit. If we all had patience, then we could really benefit in these markets, swing trading especially. You think that's a coincidence? That's a weekly fair value gap right there. The target. We're going to revisit this in about a month and let's see where price is at. Is there any pairs that y'all want me to look at? Your scalp strategy using equilibrium of the daily dealing range. I've been back testing. It's fire. So keep in mind that when you see me throw the fib on there and, look at that equilibrium. So right here, for example, we're going to look at this area of price action. I use the equilibrium to help me determine what side of the marketplace we're on. Are we in a discount market like here? Or are we in a premium market? So I'm gonna make this blue because if you're in a discounted market, then you understand that price is gonna be going up. If you're in a premium market, then you understand price is gonna be going down. Right. You can do that. you know, there's several different approaches to the market. There's several different approaches. I mean, you do typically expect some type of reaction from the equilibrium, right? But there, the reason I have these two levels blue and the rest black are because this is basically that kill zone area. You know, this is a highlighted area, but 50%, the equilibrium also goes hand in hand with this level. You know, there's not too far from each other. Because notice on this daily example, price reacted from that level and started consolidating, but it didn't continue that trend until we really got into a premium PD array, this fair value gap. This is a premium array in the form of a sell side imbalance, fair value gap. So let's apply the same thing over here. This is that weekly fair value gap. All right, so check this out. We are currently in a discounted market, but we have to understand we expanded, we retested, and now we are anticipating for price to expand, to take out this low. One or two things are going to happen. We're going to continue to drop, which I do not want to see. I don't want to see the market close a daily candle, boom, boom, boom. I don't want to see that. Although this is our dealing range on the daily, you would have to get down on the lower time frame with this higher time frame fair value gap and order block. Keep that in mind. And we'll drop down to the 4 hour. And we want to see a swing low form and price get back up into this area. Yeah, so by Tuesday, Wednesday, I really want to see price up in this area. This is that weekly fair value gap. I'm going to go ahead and delete that because it looks messy. This could be an area of interest as well, although that's a small fair value gap. But like I said, this is that daily fair value gap, which is small. It could very well shoot through that, just kind of wick through it and dig up into that. I mean, it's possible. What I do not want to see is by the time Tuesday, Wednesday get here, I don't want to see price all up in here. If that happens, then I would be skeptical like last week. I would have to see price truly trying to break down before I get in and sell. All right, y'all, I'm going to ask you one more time before I hop off. Do y'all want me to go over any pairs for y'all real quick? I'm assuming you was talking about AUD, USD. All right, I'll do a quick top down. This looks totally different from Euro USD. I mean, both bearish for sure. So it looks like we had that weekly fair value gap right here. Refine that. We refine that weekly fair value gap down to this daily fair value gap. And it looks like price expanded, capped off, went to consolidating, manipulation up into the fair value gap, and then dropped. So at this point, I would be looking at the 4 hour, 1 hour dealing range. Not sure if this is going to remain the low or not. I would not want to see that happen. That's too deep of a retracement, in my opinion. It could happen, but this is a balanced price range, and I really wouldn't want to see price get up that far. This would be a more logical area, in my opinion, but I would keep this one in mind as well, being that it's a 4 hour chart. If we are up in this area by Tuesday, Wednesday, and you feel like this could be the high of the week around Tuesday or Wednesday, right? We are in this level. I would be waiting on lower time frame confirmation to get in something that looks like this. But I don't ever trade this pair. Why you say it's a balanced price action? It's balanced price range. And I got the content in the education section of the Discord. You just have to go over it and you'll see it. But like I said, man, I don't ever trade this pair, so I'm not familiar. I am bearish on it because I'm bullish on DXY. You know, I don't have AUD, USD, NZD, USD. I don't have those on my watch list. And you know why? Because although they are correlated with the DXY, they do not move like the DXY, right? Euro USD and GBP USD. That's my pair for sure. Michael said to pick a pair that he does demonstrate. Yeah, I mean, back in his older days, like 2016, 2017, he shows you a lot of examples on AUD USD and NZD USD, but I mean, the last 4 years or so before he went to the futures contract, it was strictly DXY, Euro USD, and GBP USD. And that is when I got introduced to him, and that's the every video that I seen back then when I first got introduced to him were always based on the DXY and the Euro USD and GBP USD, right? And if you look at the DXY side by side to Euro or GBP USD, you will understand compared to AUD USD because they literally don't move any. This pair don't move anything like the DXY does. I'll do a split screen real quick. Let's jump on the daily over here. So right here on the DXY, we got this pullback, right? Look at what my cross is doing on AUD USD. It's consolidating. When the DXY is clearly going down, pulling back on a retracement, AUD USD is consolidating. Now let's go to Euro USD. It's the exact mirror image. I mean, it's exactly the same, but the opposite. When DXY is dropping, Euro USD is going up. When the DXY is going up, Euro USD is going down. And I'm telling you, bro, that's how I really like locked in and got so accurate with these analysis. But anyway, y'all, man, I really appreciate all of y'all tuning in with me today. Y'all be careful, man. Don't get caught up on these lower time frames trading on Monday. And at the end of today, you're going to look back and be like, damn, I'm glad I didn't trade today. Because look what happened last Monday. Look what happened the Monday before that. You know, it just ain't worth it, man. Patience is a virtue and will always benefit you in the long run.